So today we're going to talk about doubling down on data-led decision-making to advance the energy transition. And we're going to hear a bit about data and what Kraken's doing in that space. But instead of just doing a presentation, it's 4 p.m., people might be a little sleepy. We thought we'd shake things up a little bit, get a little bit of audience interaction. So we're going to do something a bit differently. As you can see, there's a QR code on this screen. If you guys want to pull the phones up, scan in, we are going to have a Mentimeter session today. So what that means is a little bit of competition. There will be a prize at the end. It is not a brand new electric vehicle, sadly. I was told that didn't fit in the budget, but there is a prize, and we do encourage everyone to kind of participate, get a little competition going, friendly or unfriendly. You are welcome to put your name in when you register, or you can just stay anonymous. But we'll be able to kind of see a leaderboard on the screen, and again, there will be a winner. So with that, I will pass it over to Anja to kick us off.
Thanks, Charlotte. All right. So first, before we get into the quiz, a couple of thoughts around, so you say business transformation, I think general change, which is what we hear about the energy sector. Considerations around the fact that how we generate energy, where we generate energy, when we generate energy, how we distribute it, when we distribute it, how we consume it, where we consume it, how much we pay for it. All these things are completely upended the traditional energy system and the whole ecosystem of suppliers, providers, investors around it. And some of this is really causing, obviously, a lot of opportunity and also a lot of challenge for many companies. The other industries have gone through similar upheavals over the past decades, of course, and digitalization has brought a lot. And I think one of the things that we see, which is different at this moment in time in 2025, is the availability of data. The vast amounts, lots of AI mentions, of course, throughout the day. It's fundamentally different to how digitalization happened 10, 20 years ago. So we thought we'd talk about data and have a little bit of fun. First quiz question for the audience is, you are signed in? Yes. Great. How a digitalized multinational utility, how many rows of data would you expect that they ingested? This is one of our clients that ingested in 2024. So here's a question. And how many rows of data per second did a multi-country digitalized energy supplier process in 2024? To give you a little bit of context, Visa bank card does about 10,000 transactions a second worldwide. So is it 300, 3,000, 30,000, or 300,000?
All right, results are in.
Okay. Ooh, look at that.
Wow. Okay, looks like most people in the room got it pretty right, but there was an order of 10 magnitude where we see it actually not that far off. So what do you have to say about that?
Absolutely. And this is mind-blowing, of course, of 300,000 rows of data a second. And that is for one multinational utility. So we are not in lack of data. Obviously, the question is what we do with it. So where does all this data come from? Let's first have a look at who is in the lead.
Yeah, pretty tied up for now. Yeah, Sam was the fastest. Good job, Sam. And Sam chose not to stay anonymous, probably rightfully so.
All right. So where does the data come from? We have access today to incredible amounts of data, obviously come from smart meters for the countries that have rolled them out. We also have data that comes into systems from everything from all the kinds of interactions that a utility energy supplier can have with their customer. It can be through phone calls, emails, other kind of interactions. It can be around their consumption. It can be around the billing associated with them. It can also very much be from the assets that the consumers have in their homes. We've spoken about EVs as well. So all the increasingly connected assets that consumers have, and that can be managed and controlled remotely in order to, as you heard this morning, be able to better balance the overall amount of energy that transits in the grid at any moment in time. These home assets, be they EVs, heat pumps, wall boxes, you name it, can of course all be managed and controlled. So another little question for the audience, speaking on behalf of Kraken specifically, because that's the data that we have access to. What percentage increase do you think Kraken saw the last 12 months in terms of number of controlled assets in the UK? So Kraken doesn't sell straight to the end consumer. It's through energy suppliers that then manage assets on behalf of their end consumers. So let's get going.
Speed matters here, as we've just seen.
So the percentage number increase in number of residential assets controlled by Kraken over the last 12 months. What kind of growth rate do you think we've been seeing? And there's obviously an increasing number of assets that can be controlled. Okay.
Okay, results are in. Plurality at 88%, but the correct answer is actually 97%. So, Anja, surely this puts quite a lot of burden on the energy supplier themselves. Want to talk to us a little bit more about this figure?
Absolutely. Let's first see who's in the lead. Is it still Sam?
Agent times 9.
Text 9.
Sprints ahead.
Fabulous.
And Gray's in second.
All right. So yes, it does put burden. Having this much data to manage, having consumers become prosumers, wanting to take part, or actually we need them, as we covered multiple times this morning. It's not just that it's an option for them. Actually, we need consumers to take part, because if they don't put their assets and their consumption up for management and control, then we will not be able to stay within the limits of our current grid to a large extent. So the impact on energy suppliers is very much about the amount of pressure it puts on them to be able to support these consumers. Consumers that are on smart products. So a smart product would be something where there's an intelligent use of combination of your consumption with the price you pay and what service you get at a certain moment in time. Very simple. I think it was mentioned this morning. I have an EV, I have a smart product, I plug in my car overnight and I let my energy supplier determine when it gets charged, because I really don't care. I just need it to be charged in the morning. And in the meantime, the energy supplier will optimize in order to charge at moments where energy is the cheapest. I get benefit financially. The energy supplier gets benefit financially. My car is charged. Those kinds of services put much more pressure, of course, because consumers have more questions. They're more complicated. They have more, they're also more engaged. They want to know. So one of the challenges that energy suppliers see is that it puts burden on the amount of customer service and the number of requests. So question for everyone. We need some more. Let's just wait for everyone to join. I think we're at 26 at the last question. Okay. Oh, perfect. How much more frequently does a customer on a smart tariff contact their energy supplier on average compared to a customer who's on a standard tariff? So how much more frequently does a consumer on a smart tariff contact the energy supplier versus a non-traditional?
Okay, very close. So it does look like by a hair, 3 times was correct answer, most frequently selected. Let's see who's in the lead.
Yeah, and so there's here, the consensus, of course, that it puts much more pressure, right? This is something that the energy supply needs to be able to deal with.
And now we've got looks like Grace is moving up in the ranks.
Go Grace.
Go Grace. So you mentioned some of those pressures, but are you also seeing any upsides to this increased contact with the consumer?
We are, and for sure, because this pressure on it's not just about putting, I could just put more customer agents in my call center. Surely it's not that complicated. It's actually, you also need people that understand these smart products. You need people who can interact with consumers. You need a product and marketing teams that know how to tailor their offerings and their communication specifically to consumers, prosumers with this kind of focus. The upside very much is linked to the fact that these engaged consumers are ultimately much more engaged, which means they are less likely to leave you, right? Churn is an issue in the energy sector generally. We see some of Kraken's energy supplier clients with smart products are seeing churn rates as low as less than 1%. So about 0.5% churn for consumers that are on these kinds of smart products. So is that a big difference? Is that just marginally better? So the question here we have for the audience, keeping everyone on their toes.
I think we were close to 30 last.
Is, so on average, what what percentage of UK households do change their energy supplier? What is the average churn rate?
And this is across all.
This is average across, and frankly, Europe, same thing. Yeah, in regulated markets where there's no choice, obviously there's no churn, but in a competitive market, it's pretty much the same.
Yeah. So the right answer is actually 20%, which feels like a pretty significant level of churn. And you mentioned about the difference with, smart and how that changes those figures. So let's take a look at who's in the lead.
Yeah, so going down to 0.5% is obviously very significant. And if you're in a market like, I don't know, in Germany, there are a lot of discounters. They will have churn of up to 40%, 40 or 50% a year. So very, very expensive to acquire and then lose these customers.
Yeah. Oh, wow. Yeah. Okay. So Grace is still doing well, but has dropped into second place. And Kim M, I think Kim M seems like they may be the winner, the leader by just a hair.
All right. We have one more question to go. Right. So in the end, the conclusion on this is that it's not necessarily a matter of how much it costs you to serve a customer. If a customer is happy, is willing to pay more, is willing to stay with you for longer, is willing to promote you to others, then that customer has a customer lifetime value, which is higher than your standard customer who is just, being served in the traditional way. So even if you're putting more money into serving them, you're actually ending up in a better place. And this is other industries, of course, like telecoms have understood this a long time ago. And this is very important from an energy perspective to understand, how do I create this loyalty, these interactions that I can have with my customers. So what is a good customer lifetime value? So in the energy supply sector, let's say a end customer who is on a standard tariff, typically you can probably get a profit, so the money you can actually cash in as profit on that customer, these are terrible terms, it sounds good for the Economist, it sounds very good, is probably about 5 to 6 times your cost of acquisition. So the money you spend acquiring that customer, you can expect to get 5 to 6 times more in profit over the lifespan of the time with that customer is with you, which is okay, but it's not incredible. When you move to smart products and when you can project out the amount of how you can increase that customer lifetime thanks to additional smart products that you can offer that customer, by how much do you think the customer lifetime value is likely to grow? So last question, get in there. Kim M is in the lead.
By just a hair. Game is still open to anyone.
Still open. Okay. So here comes the question. Oh,
no, that was, I think that must have been, here we go.
Hold on. Can't be over yet.
There we go.
Maybe I clicked twice, sorry about that. Okay, if a standard customer carries a lifetime value of 6 times acquisition cost, how much more valuable can a smart solution customer be? And this is based on calculations with several energy suppliers who are offering smart services. Final
Final question, final chance to claim the prize that is, again, not an EV, but something else.
Ah, well done.
Yeah. Looks like most people got this one right.
Well done. This is a significant increase, right? So this is really something that's worth considering, and therefore energy suppliers that in the past have been looking at customers almost as a burden and as a cost have an opportunity to view customers as a value. Okay.
Looks like Kim M held on to the lead. Nice. You can.
Nice. Come get your prize at the. No, we don't have it here. Stay seated. But if you come to the
booth later.
Well, we have a nice little prize for you.
Yeah.
Well done. Okay, let's just finish off in that case.
Yeah. So I think, thank you so much for that, Anja. And I don't know if you want to say any final closing words on how utilities should kind of respond to this increased customer interaction, anything like that. Just a final few words. And then after that, we have a few moments of networking until 4:45. So
I think the last comment is the word here, and, in the sense that it used to be that we had to choose between, I want to lower my cost or improve my customer service, or, I want to be fast, or I want to not take risk. Like, we had to make a trade-off. With the amount of data that's available today, if we can build organizations that actually understand how to use that data to make decisions in the moment, you can get all of that. You can be faster and lower your risk because you're using data to find out how well it's going or not. And you can give higher satisfaction to your end customers, and you can keep your cost to serve low. So with that, we'll close off there.
Thank you, everyone, so much. We do have a quick break now, and we can reconvene at 4:45. Thank you.